think this is the opening range breakout that I took. And basically I saw this large engulfing pattern. It ran up above all these moving averages on the 5-minute chart. On the 1 minute, it was also above all the moving averages. So I only took like 1,000 shares. That's another thing that I try to do, is because I get I pay commissions on a per share basis, so I try not to take too many shares, because if there's a good risk to reward ratio, then even with 1,000 or 500 shares or whatnot, you can actually make quite a bit of money. The only key thing here is, of course, is not to get chopped up, not over trade, and basically having a good stop loss, an appropriate entry and exit point. So popped up, sold, made some money, and then on the way down, I just got out of it, because one of the things that I'm trying to work on is not to have a stock run against you. Even though there was a stop here, I don't want to get stop out at this point, and I should get stop out at some point around the moving averages, because you never know if the stock will retrace, kind of like what this did, and make a new high, which is in your favor, or if it will run against you and just drop below the VWAP. So I stopped myself out before it ran against me. And part of it is I kind of expected that, because it was a little distended from the moving averages. So usually what it does is it drops back to the moving averages, holds it, and then goes up. This is exactly what it did, right? Yeah, so that's what it did. So that's MU, and then Pepsi Cola, I did 2 plays on this. One long, actually 3 plays, 2 longs, 1 short. So what I did was I saw that this was a huge engulfing pattern after the 5 minutes. It was kind of chopping for a bit, and then it dropped, hit this moving average, and then it went up. I didn't really like the price action down here, because it was basically pretty choppy. So even at 935, it didn't really break the opening range. So it wasn't worth it for me. And also the other thing I wanted to make sure that I look at is the previous day levels. They act as a good layer of support and whatnot. So remember yesterday I got kind of chopped up a bit on some of the stocks because it was too close to the moving averages. I entered anyway, and then it just bounced because that became a support level. So I didn't want this, and again, you see it bounced before it dropped again. At this point, the risk reward was not worth it for me, because this was your risk, this is your reward. It wasn't, it just wasn't worth it for me. So when it bounced off of this simple moving average, it went up above VWAP, above the moving average, and that's kind of where I caught it, is when I saw this is a huge engulfing pattern. I knew at least, probability-wise, the next 5-minute candle would be positive, and that kind of turned out my way. So I went in, I think 400 or 500 shares, something like that. Went up, I sold, it dropped, and again, I didn't want this to run against me, so I exited. But then I saw, when I looked back, it was popping back up. I saw that it held this level really well, the 110, basically $111 level really well. So when it made its run up, I entered, this time a bit bigger, 500 shares, and I sold on the way up. And as you can see, it kind of went back down so that it's closer to moving average, and then it went up again. So that's that on PEP. And then later on, when I saw that it couldn't make a new high at this level, 112.67, couldn't make a new high, and then it fell, kept this moving average, and then it dropped again. And then I looked at the 5-minute. So 5-minute could not make a new high at all. 112.51 is sort of the area where it closed at every 5 minutes. When it couldn't do that, engulfing pattern here. I waited a bit to see if it would test this level, because this could act as a level of support. When it dropped below this moving average, and it was sort of near dropping below this moving average, I felt pretty confident, and also the level 2 too, that it was going to drop. So there was this moving average here, and then there was VWAP here. So when I looked at this, okay, so this would be my risk, and then this could be my potential reward, which is, almost $1. So I took the trade, and then it dropped. So I closed, consolidated around here, and I closed a few more, and then when it went back up, I closed again. What I was hoping for was to see if it would test this 1165 level. I actually set one of my limit orders down here, but when it went up, I just closed my entire position at this. But I think I took 400 shares, so 300 was sold at pretty much the low, and then the remainder, the last 100 shares when it popped a bit. So that was that. And then Twitter, I think I only did one trade on Twitter. I'm semi-proud of it. I think if I was a little more patient, I could have captured this drop here. So what I did was another opening range breakdown. I saw that, so number one is it broke up at 9:30, 9:35. It broke up. I didn't take this trade because it was too extended away from the moving averages. And also, I think, wait, hold on, this is 66. Yeah, so I think that's my rationale. It's a little too extended for my comfort level. So 9:36 popped up. So this would be a good entry here when it's above this. The only problem with that is it's 44.79. So it's like a 30-cent difference. I think that's what spooked me out, is the fact that it's so extended that I felt it may drop down to moving average before it will continue. So I didn't take that trade. I kind of waited for a reversal, and then it started to reverse. Could not make new high here, could not make new high, and then again, engulfing pattern, right? So when it had this engulfing pattern, it's getting close to VWAP. I went short. My expectations are it's going to bounce off of VWAP. And it did. It bounced. It tested my stop loss. I thought about stopping myself out, but then I gave it a little more room for two reasons. One was this is such a big engulfing pattern that I expected it to continue to drop. Number two was the fact that you have the VWAP and you have another moving average here, and the fact that it bounced off of it before. So I held it to see. I expected the bounce. But I was keeping a watchful eye on this, and if it exceeded my monetary, usually it's like $100 or so. So if it exceeded my monetary stop loss, I would have exited, and it worked out well because I entered here. My stop loss would be up here somewhere, and it would work out to be $100 or so if I were to get stopped out. So that's the trade I took, the risk I took, and then it dropped, and this is what I was hoping for, was this level here, this previous day level. So I closed towards it, and then I waited. I kept 200 shares just to see if it would drop below it. Usually it does a bit, and then actually that's where I set my stop loss. But again, it started to go back up. I didn't know if it would go up and then keep on going up past VWAP, or just bounce off of VWAP, which is what it did here. So I just I just exited my position at this point. But as you can see, it actually tested VWAP, and then it dropped to the previous day close, and then bounced off of it, and then now it's going back up. Here, I don't know. I'm okay with this play. Maybe what I should have done is kind of waited for this to happen and maybe entered at this level, which is around here. Once it lost previous day, and then take it on the downside here towards the previous day close. If I continued to play the stock, that's what I would have done. I don't regret kind of exiting here. I could have been more patient, hold the stock, see what happens. I probably would have held it if this was a fast bounce, right? So this was a slow grind up, so I exited. But if it went doop, and then I don't know if it would go down or up, once it hit this level, I would have probably waited. If when I caught this share and it was up here somewhere, I would have probably waited to see if it would bounce up or down. But since it was slowly grinding up, I don't want it to slowly grind up and then pop up, which can happen because of how how big of a short position people were taking already from there. Because it can do what Pep did, right? Which is bounce and then go back up. So then you don't want to hold it through the consolidation. You never know what would happen. So so that's that. 593. It's not bad. So all right. That's it for the day. I'm proud of myself again. They're clean trades, and I did what I set out to do. So hopefully I can continue to repeat this until it becomes second nature. And good luck. Good luck with your own trading.